Okay, so you found a deal and you need to get some debt on it. In this video, I'm going to tell you about all the different types of people that will loan money on commercial real estate assets. My name is Jeremy Mercer. I'm the CEO of Matador Capital. In my career, I've brokered over 9 million square feet of commercial property and over 300 million in transaction volume. Last year, I purchased $35 million in assets, and this year I'm on pace to purchase $100 million in assets. Okay, so you got a deal. How are you gonna finance it? I usually work through typical local banks. I develop relationships with local bankers that have an appetite for commercial real estate deals. You get these bank relationships by literally just picking up the phone. Pick up the phone and call a local bank and say, hey, do y'all loan on commercial real estate assets? If so, who's the lending officer to talk with? Or if you deal with other investors that are in commercial real estate, ask them who they're using. A good referral from someone else always works to get answers quickly for you on if your deal fits that box that a bank's looking for. I would definitely avoid the bigger banks, the Chases, the Bank of Americas, the Wells Fargo, because you won't be able to develop a relationship with someone there. Secondly, another group that loans on money is actually life insurance companies. Life insurance companies pool all their monies of premium and then they loan it out to make money on that money. You can find good deals with life insurance companies at lower rates with longer terms because they don't require the same type of yields. Typically though, they will want a long-term leased asset to look at. They will not work on a value add or any kind of ground up type deal. Additionally, for longer term deals, you can go to the CMBS market, which is a commercially mortgage-backed security. These are always very good rates and they're longer term deals, but they have a very high cost to get out of them. So be careful in getting a CMBS loan if you think you're gonna exit the property in under 10 years. Additionally, if you need something for a quick fix up and a flip, there's always hard money lenders. These are always typical just guys that do hard money loans. I've had to take hard money loans before on land deals because of it being a high velocity transaction. So sometimes there's a time and place for hard money lenders. They might charge you 12% interest, but even though it's high, if you're in and out of the money quick, it still makes the deal pencil right. So those are also a great option, and there's also debt funds that'll invest in these types of deals as well. For me personally, it really depends on the asset that I'm buying, but most of my deals are some form of value add, either through fixing up the property or a lease that's going to expire soon that I can renew and make more money on. In those typical deals, I usually deal with a local bank that I've had a relationship with. If it's a value add property that I have to fix up, they will loan me the money to do the construction. They will give me the interest only terms while I do the work on the property, and it keeps it from being a hard money lender, which is a very high rate, and gives me the same flexibility to get the property stabilized and leased up with the tenant. My name's Jeremy Mercer. I'd love to help you learn more about commercial real estate investing. If you want to get a hold of me, DM me, leave me a comment. I'd love to speak with you more.